All right. Hello again, everybody. This is Mike Rixey. I am the lead options instructor for NetPicks, and this is our weekly options recap. I apologize. I'm a little late getting this out. I was actually traveling here over the weekend and thought I was going to have a good internet connection Friday afternoon, but I did not. So a little delayed getting this out, but I did want to cover some of our trading from this past week. Also highlight what we're expecting here for this coming week. We're getting into a very interesting stretch now. We've got a lot of heavy hitting news headlines that are going to be hitting over the next few weeks. I want to talk about how that's going to potentially impact trading here the rest of the month. So before we get to some of the technical patterns, some of the charts that we're looking at for next week, let's talk about the news cycle for next week. We are heading into a very active stretch between now and the end of the month of October for earnings. A lot of big heavy hitters upcoming. And next week, the big one is going to be on Tuesday afternoon. We have Netflix out with their quarterly earnings. Now, there's a couple of different ways to find those earnings dates. If you're a Thinkorswim user, if you come into the platform, on the left-hand side, you'll see I have a watch list of products loaded up, all the names of the stocks and ETFs that I trade. And on the left, you'll see the blue and red icons next to those symbols. If you click on those icons, if I click on the icons next to Netflix, you will see that earnings are out on October 20th after the market closes. I can see right there when the earnings are released. I personally am not a big fan of holding trades through earnings. It's just not my style. A lot has to go right through earnings. You need the directional move to be correct. You need the move to be big enough if you're a buyer of an option. You need the move to be big enough to offset the volatility contracting. Just not something I like to do personally. If I do trade through earnings, which again, it's more the exception rather than the rule for me, I tend to do so with much smaller position sizing, and I use more credit spreads versus long options. That way I can benefit from the volatility contraction, which is guaranteed to happen after a company releases their earnings. So I typically will like to close out of my positions before earnings are released. Just go flat. I fully realize that if you do get the directional move correct, there can be some pretty massive returns. I just don't like the overnight risk. It's an all or nothing proposition. And for me, I don't think that profit potential is enough for me to offset the risk that's there. To face an overnight full loss if I'm wrong, I just don't like those odds. It's too much of a guessing game. I typically will get flat, hold off, wait for the earnings to come out, and then jump back on board after those earnings are released. Now, if you're not a Thinkorswim user, a lot of free resources out there that you can use. One of the sites that I will use quite a bit is called Earnings Whispers. If you just go to earningswhispers.com, just use the free version of the site. You don't need to pay for anything here. But what I will do is come to this main homepage, and in the ticker box up at the top, if I type in Netflix, NFLX, you will see that they will list all of the pertinent information there related to earnings. Specifically, the earnings date, which it also, just like Thinkorswim did, lists the date as October 20th, and you'll see that the date or the time is at 4 p.m. Eastern. Earnings can come out before the market opens as well as after the market closes, and it'll be a mix depending on the market that you're looking at. So Netflix has earnings out after the close on Tuesday. Probably wouldn't be a bad idea here. If you've got a watch list of stocks that you trade, just go through over the next week and document when those earnings come out. If you go through here, you'll see that between now and the end of the month, it's going to be very active. Apple, earnings out on October 29th after the close. Facebook, symbol FB, out on the 29th. Amazon, I won't go through my whole list. I'm just showing you here how between now and the end of the month, just about every heavy hitter in the tech sector is going to be releasing earnings. Very important to pay attention to that. Obviously, you can see here on the October 29th, it's going to be a huge afternoon because every big NASDAQ stock seemingly reports their earnings. It's going to be a big day there on the 29th into the 30th. So we'll watch that closely. We'll talk about that more here over the next week or so. Other than earnings, we've talked about how there's been a lot of headline risk in this market. A lot of unknowns with the election that's upcoming. All of the unknowns with the stimulus. Is there going to be another round of stimulus in the weeks to come? Those events there, we really can't control. We don't know when the headlines are going to come out, right? I mean, until the election is done and over with, the potential is there for rumors and headlines to come out at any point. That's why I continue to be cautious, trading a smaller position size, just being more conservative. That's just what I feel comfortable with in this environment. Same goes for the stimulus. You don't know when that headline is going to hit, whether they're close to a deal or getting farther apart. We just don't know these days. So being cautious now is just the smart approach, in my opinion. However, there are certain economic numbers that can lead to some pretty big market moves, and they are known ahead of time. We know when those releases come out. And one of the sites that I like to use, even though I don't trade the Forex markets myself, forexfactory.com has a very useful economic calendar. I'm showing it to you here on the screen now, and I have the whole week. This upcoming week is loaded up. I'm only looking for the US related headlines, and it'll go through, and each day it'll tell you when those headlines come out. And I am looking for the red rated reports. You'll see that you'll have a yellow folder here, orange and red. They will rate those releases by how big of an impact they have known to have on the market in the past. I'm looking for either the orange or the red rated releases. Monday, you can see we have the Fed chairman speaking. We have a lot of Fed speakers this upcoming week. We've had that the last couple weeks. The Fed is just throwing everything they have at this market. We have speakers seemingly every day, talking up this market. You'll see that we have some other yellow rated reports in here as well. Not so concerned with those. I'm more concerned with the orange and red rated releases. So get questions on that. Wanted to cover it here in the video because I've had a number of those over the last week or so. How do you know when those economic numbers are coming out? Well, this is the site that I use, and you can scroll down here and see every day next week what news events are upcoming and how they can potentially move the market. All right, so those are the types of events that I just want to pay attention to. I don't want to get blindsided by a Fed speaker or the Fed chairman tomorrow morning. I don't want to get blindsided by that. We know the potential is there for a big move. Very, very well could happen here to start the week. All right, so just wanted to highlight some of those big news events. It's really, it's a triple whammy here between earnings season, the stimulus, all the unknowns with the stimulus, and the election that's upcoming in November. So a lot of potential headlines here. Doesn't mean I'm going to the sidelines. I want to remain active. I'm just going to do so in a more conservative way. That's the approach that I'm going to take personally. All right, let's switch our focus over to the technicals. Let's talk about big picture here. This daily chart of SPY, we always start out every video talking about the big picture. Looking at this daily chart, we did see a pretty nice volume session on Friday. Still not at the levels I want to see long term. I've talked here recently about why I want to see 100 million shares trade on SPY on a daily basis. When that happens, there's more conviction behind the move. It's easier for us as options traders, because we're going to be able to get better fill prices. When the liquidity is up, even though I'm not talking about volume on the shares of stock here, it does relate to the options market as well, because when you get that 100 million share level reached on SPY, you'll typically see pretty liquid options as well. And we're starting to see volume uptick a little bit. Very, very good to see. We saw a very interesting afternoon on Friday. Markets looked like they were poised to close higher on the session. We had a really nice rally going into the weekend. And then after 3 p.m., if I go over to the 5-minute chart here a second, you will see, right after 3 p.m., we saw a pretty nasty sell-off into the close. We saw some tech names, specifically Apple, sell off into the close on Friday. We saw some nervousness come into the market. Those are the types of events that I am talking about. You just don't know when those quick sell-offs are going to come. They've been vicious, but they've been very short-lived. However, however short-lived they are, when you start to see these types of moves lower, it can run your stops. It can wiggle you out of trade. So just very important. I'm not saying you shouldn't use stops. I like to use position sizing as a better way of money management. I don't want to get whipped around in these markets. I would rather trade smaller position sizes, use wider stops in this market. That way we don't get whipped around. Okay, that's why I continue to talk about so many vertical spreads as well. The vertical spreads, even though they give us a smaller return potential, it's just a safer approach. It's just a safer trade given the uncertainty in this market. So moving back over to the daily chart, what am I looking at next week? The line in the sand clearly is that 8-period exponential moving average. It's that pink line. We've talked about that here in recent videos. It's so important to break that level on a closing basis. Thursday, we briefly saw a price action below that 8 EMA. Look what happened. After we probed below it intraday, we found support there, rallied back up, and actually closed Thursday back above that level and stayed above it on Friday as well. If we can get a close below that 8 EMA, it's currently sitting at 345.99. That could open up a nice little air pocket on the downside. But so far, the bulls are definitely defending that level. That's the key area of support to start the week. If we break that level, next area is the 20 MA down at 341.71. And then you can see here we have a whole cluster of additional moving averages right below us. So there's a very key area of support here if we get anything going on the downside to start the week. On the upside, the high of the week last week, right around 354, that was the high from early in the week last week. That's our near-term area of resistance. And then above that, the all-time high at 358.75 comes into play. Those are the levels that we're watching here. I really don't care which way the market moves next week. We just want to see some follow-through. We don't want to see that whippy price action, in reaction to all these earnings numbers and the news headlines. We want to see some follow-through. So good to see some volume kick back in on Friday. A little bit concerned with the continued contraction in range. The ATR, the average true range indicator down at the bottom, is continuing to contract. I want to see that expand again. The catalysts are certainly there for that to happen, but we'll see what happens here next week. Looking at those internals on Friday, you can see on all of these, whether it be the volume ratio in the upper left-hand corner, the advanced decline line in the upper right-hand corner, you'll see that Friday afternoon, everything was A-okay all day on Friday until that 3 o'clock reversal. Once 3 o'clock hit, we saw a pretty impressive reversal, and it got ugly into the close on Friday. Futures so far overnight, Sunday night, are positive. You can see that on my platform. You can see the futures are positive. We'll see what happens, see if that fear on Friday afternoon leads to anything Monday morning. We do have the Fed chairman speaking, so that's going to be the wild card to start the week. Wanted to talk through a trade from Friday afternoon. It was our overnight pop trade. We've talked about this quite a bit here in recent videos. These are trades that we like to put on using credit spreads going into options expiration. It could be a weekly option expiring, it could be a monthly option, but if you're talking about SPY specifically, SPY is the S&P 500 ETF, we have options that expire every Monday, Wednesday, and Friday. It gives us multiple opportunities every week to put on these overnight trades. We put this trade on Thursday afternoon into Friday expiration. These are trades that we're in and out of within 24 hours. They can provide some really nice returns for us. And what we did Thursday afternoon is we came in and we sold the options expiring on Friday. We sold the 346, 344 put spread. All that means is I'm selling the 346 put and buying the 344 put at the same time. This is a neutral to bullish position. We're selling this put spread anticipating either a sideways to higher move going into expiration. That's exactly what happened for us. We didn't need a big move higher, but we did get one first thing Friday morning. All I needed is for price action to stay above 346, and that's what happened Friday morning and into a good majority of the day, again, until that last hour of the session when we got that move to the downside. We sold the spread initially for $52. $52 per spread is what we collected to put the trade on. That was the most we can make on the trade. That's our max profit potential. We tied up $148 of capital per spread to put the trade on. So very reasonable cost regardless of account size. We closed this trade out first thing Friday morning for 13 cents. Okay, it gave us $39 of profit per spread, or $117 of profit if you risk $500 per trade, which is what we use to track these recommendations that we send out to our customers. Now, I got some feedback from a couple of traders Friday that closed out of this trade and said, hey, it was a nice small profit. You've got to remember that if $39, yeah, it might look small initially. $117 might look small. It was still a 26% return on our capital. It's that number right there. 26% return, and we are in and out of this trade in less than 24 hours. Guys, I will take that every single time, right? You can put this thing on 10 times, right? You put it on 10 times, you have less than $1,500 at risk. Now, all of a sudden, right, you've got a $390 profit. Okay, you do that a couple times a week. That's a nice little supplemental income, right? I'm not saying you should strictly trade these overnight pop trades, but they can be a great bonus to some of the other trading that we're doing. Yes, the long calls, long puts are going to give you a bigger profit potential. they're also going to come with a lower probability of success. You have less chance of hitting those big returns. With a credit spread, this trade on Friday, we had 5 ways of making money on the position. We made money if the stock moved up, down, or sideways. As long as it stayed above 346, we were okay. We made money from time decay adding up and from volatility decreasing. We had 5 different routes that we could have gone to make money. Fortunately for us, we had a lot go in our favor. We did get a move to the upside Friday morning. We did get time decay, it was dropping off a cliff, which was helping us, and that allowed us to book a really nice return. So those overnight pop trades continue to do really, really well for us. Would love to have you join us for our next round of those trades. So if you would like more information there, feel free to send me an email, mike@netpicks.com, and we'd love to get you some additional information there. All right, so just wanted to highlight that trade from the end of the week. And I did get some questions from people asking, why didn't we just hold into expiration? Why didn't we just hold into the end of the day? Well, we saw that sell-off, right? I talked about that sell-off, that last hour of the session. I mean, in this market, guys, I would much rather take the partial profit, free up the capital for the next trade, and not get caught by a late day reversal. In this market, we've seen a lot of those big quick moves, all right, due to headlines. I don't want to get caught by those. So I don't recommend holding credit spreads all the way to expiration. I would much rather have you close them out early. It's just a safer way to go. Still a really nice profit, even though we didn't hold expiration. We close it out early, 26% return on our capital, and just a really nice trade for us. Let's talk about some markets that we're looking at going into next week. I'll talk you through some trades that I am looking at. Here's SPY. This is the 195-minute chart. We've talked about this SPY trade that's been in progress the last couple of weeks. Definitely finding some difficulty right at this 360, that 350 level right here. We have found some resistance there. Price action has been hovering right on top of the 8-period EMA. That is the red and blue line there. So that moving average definitely acting as a magnet here. I would expect a breakout away from that level next week. Whether it's to the upside or to the downside, we'll just have to wait and see. Price action, I continue to lean cautiously bullish here. I would much rather have the market head lower, but every dip has been bought. We've seen very little follow through on the downside. So until some of these key support levels break, till we see that volume pick up, I think you'll just have to continue to lean bullish here in the near term. So just like we talked about the last few videos, there's no potential for new trades here based off of this chart pattern. If you're already in a long position on SPY, I'm fine with that. I don't think now is the time to initiate anything new. We're just in a holding pattern here for the time being. So we'll wait and see what happens. What would change my outlook next week is if we get this thing to continue heading lower, and if our trend strength indicator down here flips below the 0 line. Currently it's sitting at 1.08. I need that to flip the 0 line in order for us to get a new short trade. So just in a holding pattern there on SPY. QQQ, just hitting the major index products here first. Very similar looking chart to SPY. Okay, that sell-off Friday afternoon did give us a move below the 8 EMA, below that red and blue line. Important to note, if that level continues to break going into next week and our trend strength indicator breaks the 0 line, I would definitely be interested on the downside, given how many names we have in the tech sector that have earnings out over the next week or two. If you're going to put on any type of a trade on QQQ, just be cautious. Control your position size. I've been trading a lot of my open trades here lately have been taken with between 50 and 75% of my normal position size. So I'm cutting back just given the amount of news that is upcoming. A couple of new trades for next week. And I'm getting a little bit long on this video here, but just wanted to show you some of the trades that are on the docket for next week. Symbol MA, this is MasterCard. You can see that here at the bottom, our trend strength indicator did flip below the 0 line, putting us in bearish mode. We also had price action close below our 8 EMA. It also tried to break the 50 EMA. That's that yellow and white line here up at the top. So this one, definitely interested in playing the downside here. The short entry point was right around 340.25. This trade did trigger in. We're sitting right around that entry point, so it is still a valid trade for next week. Our stop is currently sitting up at 349.60. So that trade is currently in progress, but you certainly could add it here as well next week. Moving on over to the trade page, just real quick here. on any type of a new directional trade, like a MasterCard, a trade that we just talked about, I am interested in the November monthly options. Those are the ones with 33 days left to expiration. I'm trading a lot of those right now. Anytime I'm buying an option, I typically like to be in that 20 to 40 day range left to expiration. So that's where I'm going to be looking at here going into next week. And again, if you're looking for a long option here, I am interested in the 345 puts. They're a little bit pricey. It is a $340 stock, but the 345 puts get me slightly in the money, have decent liquidity there, enough for me to get filled. And those options at the end of the week, we're trading right around $1,600 per contract. So that's the way that we'd be interested in playing MasterCard on the downside. Some of the financials, Citigroup, the financials continue to be really weak here. We've talked about how difficult it is for the overall market to make a big move if the financials are not at the very least participating. So that's something else we'll want to watch next week. If these financials remain weak, I think it's going to be very difficult for the overall market to get some traction on the upside. Citigroup is already in a short trade. Our trend strength indicator firmly red down at the bottom. That trade triggered in last week, and tiny profit so far, nothing significant, but definitely looking for a further wave to the downside on the financials. ROKU. Load up the 195-minute chart here. Definitely overbought. We did get our pulse indicator to plot yellow last week. That indicates that we hit between a 1 and a 2 standard deviation move on the upside. In other words, we're overbought. Doesn't mean price can't head higher. It just typically means when you start to see yellow bars in the pulse, typically means you are at an extreme that will lead to either a period of consolidation or a reversal in the other direction. Look what's happened since we got that yellow bar. Price action got tired and we started to roll back over to the downside. We even got price action to close below the 8 EMA. ROKU next week is definitely on my radar for selling a call spread. Selling a call spread is a way for me to lean a little bit bearish in a more conservative way. ROKU definitely on my to-do list. Would love to put on a neutral to bearish position there next week. Work, WORK. This is Slack. Similar chart pattern to ROKU, and you'll see the yellow bars on the pulse indicator down at the bottom, indicating that between a 1 and a 2 standard deviation move. Very overbought. And look what's happened since those yellow bars started to plot. We have seen price action level out here, starting to consolidate, even started to roll over a little bit on Friday. If price action breaks that 8 EMA, here early in the week, the 8 EMA is right above 32.15 or so. If that level breaks, this is another short call spread opportunity. Just like ROKU, looking to lean a neutral to bearish here. Not interested in long puts yet because we haven't seen that trend strength indicator flip below the zero line. I am interested in selling call spreads because those are trades that allow me to be more conservative, stack 5 ways of making money in my favor. It's a more conservative play when compared to just buying the outright put. So work is on my list as well. And then finally on Apple, if we take a look at Apple here, it's interesting. Apple does not like to stay quiet very long, but it has been a typical pattern historically that going into earnings, it's not uncommon to see a stretch where we get some consolidation, we see some chop. Earnings are out at the end of the month, end of October. We have got this choppy stretch in here, right around that 120 level. It's what we call our coiled spring pattern. Apple's not a name that likes to stay quiet for long, and it's been quiet here of late. I am expecting that coiled spring pattern to pop, just like a spring. When it coils tighter and tighter, at some point it's going to pop, and when it pops, it can be explosive. That's what we expect here on Apple. I don't know which way it's going to break. None of us know. We don't know if that coiled spring is going to break higher or lower, but as soon as it does break, it's going to give us a very tradable move. It's on my radar here. I don't have any positions on Apple. Cautiously looking at it for next week. Wouldn't mind getting a credit spread on with the weekly options, trying to get a trade on between now and earnings that would benefit from just a choppy stretch over the next few weeks. So potentially now you're in Condor, or if you wanted to lean directional, if you wanted to lean bullish, selling a put spread. If you wanted to lean bearish, selling a call spread, open to all of those. If I'm going to get a trade on here between now and earnings, I'm expecting it to be a short duration. I don't want to hold through earnings. So anything that I do next week, it would be a trade that I would close out before the earnings are released. So We'll take a close look at Apple next week. Not only am I looking for a new position there, but we know Apple is such an important part of this overall market. It drives everything that happens market-wide with the index products. So even though, we're flat at the moment, and maybe you don't want to place a trade before earnings, you want to watch it closely. It just has a big impact on the directional move of the overall market. So heading into next week, again, cautiously bullish until the market tells us otherwise. Friday afternoon, a little bit concerning to see that selling during the last hour of the day. We'll see if that leads to anything early in the week. But again, we have a lot of Fed speakers, a lot of earnings numbers next week. It could be a pretty active week for us. And I'll be back on Wednesday for our midweek update. And we'll talk in more detail about what we see to start the week and how that impacts us going into the end of the week. So if you have any questions on anything I've covered here today, feel free to post a comment on the video or in the blog, or email me directly, mike@netpicks.com. Otherwise, I'm going to wrap this video up here. Enjoy the rest of your weekend, everybody. I will be back on Wednesday for our midweek update. We'll talk to you then.